Hey traders, this is Cousin Vinny coming to you from Day Trading Radio with a primer on options trading and what to look for. This is a daily chart of ROVI, which we've been trading over the past couple of months. In and out positions fairly quickly from an options point of view. And just breaking this down, this is the daily chart. We took ROVI on this candle right here, at least I did. And some of the questions that came up in the room were, why did I take the trade on Wednesday? What did I see? Well, first off, I saw the 200 EMA, okay, below us. And what I was looking for was a shift in momentum on Wednesday. So let's go look at the hourly, okay. That's the 25th. This is Friday, Thursday, Wednesday. I was looking for a shift in momentum to the upside, okay. So early morning, we're right here. Okay, this is the opening candle. We started heading lower, okay. And what I was looking for was coinciding with the 200 EMA bounce area was a green candle, okay. I wasn't looking on the hourly, but just bear with me a second. So we see this candle here, alright. It's on or around the noon hour, which if you know me, a lot of times I won't enter a trade until 11:30 or 12, and this is why, okay. Let's go into the 30 minute. Looking at the 30 minute, Friday, Thursday, Wednesday, okay. Here is the drop down, okay. And we start to see the shift in the momentum. You can see it quicker as you go down in the time frames. Down meaning from the hourly to the 30 to the 15 minute. Okay, I usually watch the 30 minute and then shift to the 15 minute to give a more precise entry area. Okay, this is Wednesday. This is that move down, and you can see on this candle, this is a 15-minute candle, so you don't have to catch the absolute bottom, but you see a crossover right here. You get a signal, and something Johnny mentioned on Friday occurred to me that I should mention here is that there's no guarantee this won't go down further, okay? But when you take a position and you have an indicator, that's one indicator. It happens that at the close of the day we had the second indicator, which is a hammer candle, okay? And using the closing prices, we now have a 2-point lower trend line, okay? So that descending trend line gives us a point where we can trade off of. Okay, so this doesn't guarantee that you won't get a further move down, but what it does give you is a good point of risk tolerance where you can measure your risk, okay? Measure it in the sense that, okay, I have something here that's telling me I'm taking a lower risk trade than if I took it up here, obviously, okay? Knowing the way Johnny trades, alright? So that candle started the methodology for us, or the entering of this trade, okay? So we saw this move down. This was a pretty substantial move down on earnings that were okay, but we lost 50 EMA right here, okay, on very large volume. So that was funds getting out, okay? They were out the door. And they continue to sell until they hit the 200 EMA. Okay, and that was a reversal point. So at this point, we're looking at this candle, and from an options entry point, what we want to do is we want to get an oversold stochastic where we get a signal. Okay, we want to see volume higher than normal on the 15 minute, and we want to see a candle that drops down, sort of a hammer, and then closes higher. Okay, I got in on this candle right here because I knew my risk was limited, and I knew where my stop was. My stop was down below the 51 level. So I got into the 50s at this point and traded only a scalp. Alright, and I ran this move up till we exhausted and we flattened out. I started to see us flattening. I said, you know what? This is where I'm going to take my money off the table. So I took a portion off. I only took a half off, and I swung the rest on Thursday. Okay, so I saw the signal turn down on Thursday, so I got out of this trade completely, and we had a nice move from 51.10 up to actually got out here on the second half at 54. So my average was around $4 on this trade. The options were in the money, and the delta was around 80. 10 options were around, I forget. It was, I'm looking at my notes here. It was $2.25 that we made I made on that particular trade. All right, so not bad for a scalp on the first half and a swing for the second half for an average. So that's the way I trade options. You have to trade them the same way you do common, only from the standpoint of stochastics indicator. However, you don't necessarily want to trade options just because you have an oversold stochastic and start to move up. You need to wait for an entry signal. Now, if I were to take this signal here, we have an oversold stochastic. We got a buy signal off this lower trend line, 200 EMA bounce. We already got this hammer candle, and we have a trend line. However, if we look at these two candles, what I'm looking for now is this oversold or overbought stochastic to come back down, and we can get that pretty quickly, actually. So I'm waiting for this to come down. It doesn't mean this can't continue higher. This could embed, but for me to get into a call options trade, I want this to drop back down, and it's very possible for this to do this in an intraday basis. Okay, you have candles that have a range during the day where you open, you trade lower, and then you close higher. Okay, that range you can trade with options. You can scalp that range. You just have to know what you're doing, and if you follow the methods I'm using here, you could do that. On these two candles here, we're overbought. Okay, we're overbought. We're overbought on the 15, 30, and 60-minute time frame. So we want to wait for this to come back down and get this signal right here. That's what you want for a long. Okay, this is Cousin Vinny. I hope this made sense. And we're going to take profits, and we'll talk to you on Monday. Take care.